Honestly, not the cleanest market maker buy model, but this is what I'm looking at right now. Is the sell side of the curve, buy side of the curve. And this morning I wanted to take a buy, but I was driving my cousin to school, so it's all good. We'll just wait. Right now, I think the draw on liquidity is these equal highs up here, though. Then we can probably do some projections with our SMT divergence too. Let me see if this is good. Something, I would probably look at my projection, something like this. Have you guys watched my last, like the lectures I released, like for New Year's and Christmas? Do you guys have any questions on those? Because while we wait for this to play out, it'd be a good time to like ask questions and stuff like that. When is an SMT invalidated? I think that comes down to context. So it's really what I look for is within a higher time frame point of interest. So for example, this high right here would be a unicorn model on the 4-hour, right? Because you have this up close candle, displays through it, fair value gap, and then we have draw it out in time, unicorn model, right, on the 4-hour. So that's where I start to look for my SMT divergences. And if we get an SMT divergence within a higher time frame point of interest, then that's when I want to use it. I would look at an invalidation for SMT divergence just simply if my trade idea is wrong. And that's where you have your invalidation zones, like Jesse was talking about on the weekly or the daily, for example. You'll have your invalidation zones, and once those zones are hit, then you just essentially just assume it's invalidated. Or you can also look at if your drawn liquidity has been met, then that SMT divergence would be now engineered liquidity, right? Do I have favorite smart money reversals? I wouldn't say I have favorite smart money reversals, or just say like within higher time frame point of interest. Like that, I'm always just looking for SMT within higher time frame point of interest. Or really you want to use market maker models in context of that smart money or the SMT divergence, right? So for example, over here, while I was looking for SMT divergence this morning and expecting bullish price action, is because we have the true session open here, right? And then we have a fair value gap that creates through it and it supports price. So right here, this low is important to me within this fair value gap. This is where I'm looking for my turtle soup. That was important to me. And then we get an SMT divergence, right? With ES right here, right? This low gets taken. And then we also have an SMT, I believe. Actually, we did not have an SMT with Y, it was just ES. Yep, always the 3 qualities. Holman, do you mind muting?
Oh, sorry.
No worries. Does that make sense so far? Like how I'm using SMT divergence? within like a market maker model. So if we're looking at 5 minute, this looks like a market maker model in itself, right? Where we're going to for this high, but I'm really looking at this 15-minute market maker model because we have all these equal highs up here into this daily fair value gap. If we go to the daily chart, this right here is a daily fair value gap, right? So we tapped into this fair value gap within this order block. So they're overlapping. So where would I expect a retracement if the market is bearish right now? I would expect this fair value gap minimum. Or even if we're bullish, we could trade right through it. Does that make sense? At the end of the day, I'd say like trading ICT concepts is it all comes down to narrative. It's really hard to kind of have like a fully mechanical model in my opinion. Like if you want to find those like scalp entries with swing targets, like that's where a lot of discretion comes into play. It's just you have to, you know, learn one thing at a time, baby steps, and then build up that understanding. Like every day I'm learning something new too, right? I really think this would be the draw, but if we're looking in terms of liquidity, we just took that high, so you can look out for that as well. Um, Doug, in terms of that 1 minute market structure shift, where do you see that? Oh, if I see one, I probably wouldn't because right now I'm still waiting for bullish price action, right? So I was also looking at dollar and dollar. If dollar continues bearish, then indices are going to push higher, right? If we look short term, I can see all of this buy side has been purged right here, right? And then if we fail to really get displacement, but I do see order flows like supporting price lower. And now we're taking out all of these equal lows, or about to. And if we do that, then I can see what my eye draws to is all of this trendline liquidity right here is what's possible is that price can just trade into these lows and trade higher and then back lower, for example. That's what I'm thinking right now. And if this were to happen, then what happens when DXY pushes up, right? Indices would push down. And that kind of makes sense with the narrative that NQ over here, actually it's pretty far down. But if we take liquidity up here, then we can get like a retracement, which would be in context. I don't know if you can hear my fire alarm, but if that's going off right now. So if you hear it, just ignore it. Any questions on what I just said though? The question. Last video for 2022. Can we do that for the start of 2024 sometime? You mean like the quarterly shift and stuff like that? Actually, yeah, I'm down to do that. Give me 1 second. Since we're just waiting for this. Like, the thing is, I would not trade this. Why wouldn't I trade this? Because my target has already been met, right? So there's really no point. Like, if I wanted to long, that's where I wanted. This is where I wanted to long. But I just missed that opportunity. So now I just stay sidelined and I wait. We hit that negative 2.5 standard deviation on the 1 minute. I could expect some sort of retracement, and that could be possible. But once again, it's not really something I want to trade, especially the 920 to 940 macros over, and then also it's a Monday inside January, right? No news either, so not really something I'm expecting further too much movement for the rest of the day. Ooh, do I want to remove the drawings on this? I do not. Okay. Go to so here I would start my analysis. Generally, I start on the monthly just to see what's going on. But the only thing I can see on the monthly is this volume imbalance all the way back here that we rejected off of. And if this volume balance holds, what I'm looking at is this monthly fair value gap. But this is like monthly analysis, so it's pretty far off. But once again, utilizing that time frame alignment, I would see what looks cleaner right now. Does my weekly chart look cleaner, or does my monthly chart look cleaner? And right now, if I'm being honest, I feel like the monthly chart looks pretty clean because of this volume imbalance that we rejected off of perfectly. But if we're using the weekly chart, for example, then we also have this fair value gap I've been looking at for a lot of weeks now. And we finally we touched consequent encroachment of this fair value gap, started to trade lower. So this week, honestly, I would expect bearishness, just because if we're truly bearish in the market, then I'm looking for this fair value gap to get created, right? So I'm anticipating a fair value gap to be created. But let's just say the monthly chart was cleaner to me and I just started on that, and I'll delete this one. So from the monthly, I'm going down to the daily chart. So because now it's a new quarter of the year, I'm putting a vertical line right here, January Q1, right? And so from here now, I'm looking for some sort of quarterly shift. And the reason I'm still bullish on price right now is because it would be really nice. Now, I'm not saying this has to happen, but it would be nice that we get SMT divergence. Let's say this is NQ, and then over here we have ES, for example, or YM, where we have that SMT divergence on the highs, for example, like that, SMT divergence like this. Then this can confirm my quarterly shift that we're going lower, for example. Does that make sense? And that's really what I'm looking for in Q1 is, or really every quarter, is I'm looking for a quarterly shift. Yeah, of course, Shipwrecked. I can go over that. Is there any more, like, does this make sense to everyone though? Just where I'm looking for SMT divergences. So where I'm looking for SMT divergence is in relation to time, and then second is in relation to the higher time frames. That's really all I'm looking for. And that's where I'll find my high probability reversal points in the market. Because when you get an SMT divergence, just think of it as an ICT trader. It's like in one market, you might get this as like, okay, I'm waiting for this turtle soup before I go short. Okay. But then in another market, you get that SMT divergence, which already gave you that turtle soup. So essentially what it is just the market makers are front running whoever wants to get in on a turtle soup. That's how I like to think of it. Because we learned that the market gets fuel above highs, right? And sometimes that doesn't happen, it just runs. Well, that's because it's already happened in a correlated market where that manipulation has already occurred. That makes sense? And that's why I think SMT is so important, right? Because if this SMT, all the way back where, if this SMT didn't occur over here, I wouldn't have been confident in longing this. Because this is showing me that this accumulation phase is over. We're expanding, right? Let me just mark that out for you guys. Okay, that negative 2.5 standard deviation, we can expect some sort of pullback. And then here, once again, right, we took external range liquidity, hit negative 2.5 standard deviations. What do we have on the highs here? Do we have SMT divergence? This is where I would look for SMT divergence. We do have SMT divergence with a YM. It's a very ugly one, but for example, this is where I would look for one because this is somewhere I would be expecting some sort of change in state delivery, for example. And then I'm going to go over how I define high probability order blocks. Honestly, high probability order blocks are, we learn them as manipulation blocks. So that's one way of identifying them. And then also order blocks with fair value gaps overlapping. So let me, what is this right here? What am I looking at? Oh, okay, never mind. I guess I'll try to find some high probability order blocks. Like for example, I would say this down close candle would be an order block, a high probability order block. Reason being, it's coupled with this fair value gap, right? Or this would actually be a breaker, sorry, not an order block. This would be that unicorn model that I'm looking at right now. And then this would be the high probability order block right here, these up close candles, sorry, with this fair value gap. And so when you have this together, that's why I say the unicorn model that I posted is so powerful, is because what you really have is 3 PD arrays that are high up probability. Why is it high probability? Because you have 3 things coupled together. So it's like a breaker, order block, and fair value gap. So if price breaks through this level, I'm not interested anymore. I'm going bullish, right? It's just the same concept as an inversion. How come when a gap inverts, we're suddenly instantly switching our bias? It's because that fair value gap failed to hold price. Manipulation blocks and breaker blocks. So manipulation blocks are the order block. So, okay, how do I explain? You point out your stop on this unicorn. My stop loss would be up here if I were to take a trade from this unicorn. It would be like this. Right? Because an order block is all consecutive candles within a liquidity rate that is an order block. So I'm going to explain the difference between a manipulation block and a breaker block. So a manipulation block is essentially a refined order block, if that makes sense. So if an order block is a series of, let's say, down closed candles here, right? Then Jesse, why he calls it a manipulation block, is essentially it's just that refined order block. So we're looking for if this whole thing is an order block, right? Because it's down closed candles, consecutive series, right? So there's 1, 2 that takes out liquidity right there. Okay. Takes out liquidity. And so we look for the manipulation block. So how do we know where price will most likely react to within this order block, right? Because it's such a big area. And what Jesse essentially discovered is that it's the down closed candle in this case, because it's a bullish order block. It's the down closed candle that closes beyond liquidity. So this down closed candle closes under this liquidity level, right? So this is really the candle that we're looking at right now. This is the one we pay attention to. Does that make sense? Now I'll try to find you a bearish example. I'm gonna try to find you picture perfect examples. I don't really like these. Maybe I go down to a lower time frame. I don't really see any picture perfect examples right now. Crypto Ren, which part of my explanation was a little confusing for you? No worries, no. Alright, no worries, take your time. Any more questions?
Hey, Ethan. Sorry, hey, Ethan. What's up, dude?
What's up, what's up?
Dude, thanks for Christmas special.
No worries.
Dude, I just had a question. On that Christmas special, you're discussing internal ranges, so internal liquidity to external liquidity. And we were like, it's on the sell side of the curve, and we'd put in a new range. And then when we retrace back into that sell side of the curve, you call it taking external liquidity, but we're actually just coming back into internal liquidity of that range.
I need to find a visual.
It's a 12.25. Hold on, let me just get it up here. I'll come back to you, dude. I'll find a visual for you.
Okay, no worries. Let me look at AUD. Sure. I'll take a look. I don't trade Forex, but I'll do my best. Okay, well, whenever I do analysis on Forex, I always look at DXY first, and this is my priority because it's correlated to everything. So right now on DXY, what I see is that this inversion gap is being respected and we're trading lower, right? This is my first objective that was met already. Then now I see that we engineered equal lows right here. Right, so if we continue lower from here, then I would be looking for this low right here, which means we're looking for higher prices on AUD. So we can go to AUD. I think I just pressed something. Oh, okay. Okay, so starting from monthly chart, I do see these equal lows. Oh, I like this. So if DXY was to be bearish, I expect AUD to continue higher. So if that's the case, then this is the order block that I'm paying attention to right now on the weekly chart. And then within the weekly chart, wait, let me also draw this range for you. Yeah, I'm recording this cheap. So within this range, this order block is in discount, right? We also have an RDRB right here. So if we're continuing bullish, I would want to see specifically this area right here, hold price. Okay. And so we can drop down to the 4-hour now. And I would expect 4-hour structure if we're going for these highs up here. These highs up here. If we get that 4-hour structure proving that we want to go higher, then that's where I would be looking for. As of right now, we're kind of just tapping into that weekly area of interest. So I would wait personally before trading. I can't move this. Because once we tap into a higher time frame level, we can anticipate consolidation of some sort. Taking lower lows. We have SMT. I don't see SMT either, so I'd just be sidelined on AUD personally. But I would lean bullish as of right now if DXY continues to prove bearish.
Ethan, I just dropped a screenshot there in the chat. regarding internal and external ranges. You mentioned in the Christmas special that if you drop down to the 4-hour, you would have probably seen an external range taken.
Okay. All right, perfect. Let me look really quick. It's right here.
Yeah, that's it.
This to this low.
But it was even just it was that one, but just a little bit before that, you'd drawn out the range, just
Down here,
get your
this
screenshot
one.
now. No, it was to the middle of that SIBI there. You'd drawn out the range to the middle of that SIBI in the candle. I'll show you now.
Okay.
Like that, and you were saying something about ranges and how you could see that it had taken external range liquidity, even though it had just reached up into that SIBI. Based on what I think you would have seen in the 4-hour, or I don't know.
Yeah.
I'm trying to work out that.
So dealing ranges essentially is just whenever you have a consolidation within a range, you can use that as a dealing range.
Okay.
So, right here, for example, this 4-hour dropping down, right? But we're expecting the higher time frame to go higher. And so that's when we anticipate bullish price action. So if that's the case...
Okay, sorry, carry on.
Oh, sorry. What were you?
No, carry on.
Okay. So if we're anticipating bullish price action here, also look on the 1 hour. I think it was a little clearer here. Was it? Right. Okay. This is what I was looking at. This SMT divergence right here. So if our higher time frame is bullish, right?
Mm-hmm.
And we're looking for a continuation higher. I was looking for price to continue into this consequent encroachment. So if we're looking for price to go higher from a higher time frame direction, if that makes sense, then we can anticipate SMT divergence to push price higher. So right here, for example, we get this SMT divergence, and now we can look for opportunities to go long. So in this case,
no, I follow you there with the SMT divergence. Sorry, before I waste your time and let you get too ahead of off track. It was just regarding range in terms of like an internal range to external range, and you'd mentioned something, I can't think of the exact words now, that you'd seen that candle had now taken external range liquidity that high, and it was now moving down to take internal range liquidity before the true move up. That is why you were also quite bullish.
Like this trading
because it
lower?
it hadn't reacted. You hadn't gotten the reaction off of the breaker like you wanted. So because you hadn't gotten the reaction off the breaker, you'd shifted bullish, and then one of the reasons that you'd shifted bullish is that you were now aiming for the external range liquidity. And I was just wondering which range you were working in once you'd shifted your process from realizing that it wasn't reacting off of the bearish breaker and was now going to be bullish towards the highs.
So in the full range I would be working in within would be this range right here.
Okay.
And then once we get that consolidation, now we're looking in terms of what is discount, what is premium, right?
Yeah.
So if we're looking at this high would be external, this low would be external range liquidity. Does that make sense?
Yes.
And so as we're trading higher, now I can dissect this larger range into smaller ranges. So
okay,
by using this larger range, once this unicorn model right here, I was anticipating to reject price further lower past this external range liquidity, right?
Yes.
But we didn't get that. So when I'm paying attention to my 15-minute structure, or really you can just look at 4-hour here, is you can see that bullish order flow is now being respected. So you have your
Yes.
order block being respected, another order block being respected, right?
Mhm.
And I'm also looking at the RDRBs. And that's an RDRB is like a clear indication to me which way the market is moving, if that makes sense. 'Cause
Yes,
with-
and then
yeah.
with the range that would be working in now, once this low had been, yes,
Sorry.
once this low had been put in over there, and you're working in the range of that first picture that I sent, is that the new range that you would consider as like being internal and external?
Yes. So this is like,
okay.
Because price is fractal, right? So this new,
Yes.
okay, so if I were to draw a range from here, for example, this high right here would be that new external range liquidity I'm looking at, because we're looking at a lower time frame range, then this would be
the lower time frame range. Yes,
this would
exactly.
now be an external range liquidity. Yeah.
That move down would be considered as the move to the internal range liquidity, and now you're seeking external range liquidity, which would be that high that you've got marked.
Exactly. So do you see how
fantastic.
Yeah. So you see how price taps into this unicorn model, trades lower into this internal range liquidity, right?
Yes. And sorry, but that trading up, that first trade up into that unicorn model, is that trading into some form of external range liquidity or internal range liquidity?
I would consider this to be internal range of the bigger range, if that makes sense. So the larger range at this fair value gap would be my internal range liquidity I'm looking at. And that's why if we were bearish here, right? The reason I wasn't very confident in this bearishness is because we didn't get SMT on the highs here. So the only thing I had to rely on was this unicorn model. So I took a short from this unicorn model down to around over here and took profit when I saw 15-minute structure was proving to be bullish within a 4-hour level. Does that make sense?
Yes. Yes, because of your time frame alignment.
Yeah. So once I saw 15-minute being bullish from here, I realized that this 4-hour unicorn model is not being respected because
invalidated.
Exactly.
Yes.
Because if the unicorn model is one of the strongest algorithmic entry drills, then naturally you would see very strong displacement away from it, right? But in this case,
you don't. I completely agree with you. Like that's like when you said all of this is why like I'm so stoked with the Christmas special. It's like a lot was clicking for me. But like there's one example that you've got on your YouTube video on internal and external range liquidity when you're talking about Bitcoin. I'll just go find it. Maybe you can answer somebody else's questions. I'll go find it and maybe I can send you a picture. It's just one thing that I need clarifying on. Everything else I'm super covered with. It's just like you mark one high as like a external range liquidity, whereas I would look at it as an internal range liquidity. And I'm just worried about the confusion. Okay, I'll get back to you now. Thanks for your time, Ethan.
No worries. Okay, did that spark any more questions or is... Oh, nice trade, bro. That looks fire. Let's go send it to the heavens. I think I missed. Okay, a manipulation block is the last.
I got it, Ethan. I got it.
Okay, perfect.
It's just if you look at the photo that I sent you now, that first external range liquidity that you've got marked on the left-hand side, why would you call that external range liquidity? Would that not be internal range liquidity due to that previous range that it's come down from? I'm just wondering why you've marked that as an external range liquidity.
So if we're looking at our range structure, right? Once this low gets violated, this right here,
yes,
this low gets violated, a new range
Yes.
is created, right? So this high to this low is now that new range.
I see.
So this high would be external range liquidity. This low would be external range liquidity now. Does that make sense?
Oh, yes, exactly. And that's the exact thing that happens is it takes out that external range liquidity and then drops back down
Into
into that
internal.
internal range liquidity. Man, dude, the Christmas special. Merry Christmas, Ethan.
Merry Christmas. And then we also have, and then now this new range is created, right? So we drop into internal. So what's the high and
Yes.
the low of this range? Is this low is the external, this high is the new external range liquidity. Right?
Perfect. And then the same thing again. That low would turn into your external range. Yeah, that would turn into your
Exactly.
Fantastic, dude. Thank you so much, Ethan.
No worries.
Peace.
All right, I'm gonna. What a manipulation block is the last bearish candle before. Okay, I need to read this. I'll just put this here so you guys can watch how price plays out. I think that the final target is low key up here, but you know, I'm not gonna put my money on it because I don't know if it's gonna happen or not. Okay, so a manipulation block is the last bearish candle before an impulse move up that sweeps liquidity to confirm. No, that would be a break. So that manipulation block definition is a breaker block. A manipulation block is an order block, essentially. Do you understand order blocks, CryptoRen?
I realize I can unmute myself. Yeah.
You do? Okay. So understanding what... Okay, let me get the example here. Okay, this is perfect. So if we know what an order block is, right? All these down close candles right here, that's an order block, right? Because it takes out this liquidity right here. Okay. So this down close candles, series of down close candles, this would be a bullish order block.
Okay, but on the flip side, if you took the candle right before that, which is a bullish order block, you know, right from your start point, wouldn't that form a bearish order block? Because you had the up candle followed by a big down move.
Yes. So this up candle right here, this would be a bearish order block. This specific candle.
Right, yeah. Okay.
So I'm just using this example right now. I'm pretty sure this would have occurred within a higher time frame key level, which creates this order block. But we're just going to focus on the order block for now, so I can show you what the manipulation block is. So the manipulation block is once we get a push under liquidity, right here, this would be that liquidity level. We're looking for the down close candle. So all of these down close candles are an order block, right? So what the manipulation block is the candle that closes beyond liquidity. So in this case, we're looking for the candle that closes below this sell side liquidity. And in this case, it would be this candle right here. Does that make sense?
Okay.
So this is really the candle that we're paying attention to for price to respect, if that makes sense.
So in this case, a manipulation block is part of the bullish order block.
Yes, all manipulation blocks are part of, yeah.
Okay, so by default, all manipulation blocks are part of an order block. It's
Yes.
it's one of the candles in the order block. It's a way of refining the order block.
Yes, exactly.
Okay.
So
All right,
yeah,
that's
exactly.
clear now.
Perfect.
Thank you.
Did you need an explanation on breaker block then, or did you understand that?
Sure. I mean, while we're at it, that's just to be super clear.
So a breaker block is So you said that this up close candle is a bearish order block, right? And that's true. It was once a bearish order block when we were over here. Okay. Right now we're looking at this order block and saying, okay, I think it's bearish. But once we trade above this high right here, this specific high that is how do I explain? I guess just the most recent swing high, right? With that breaker or that bearish order block that we were expecting. Once that high gets invalidated, that's a market structure shift, right? So now this bearish order block becomes that breaker block. So we can look at it as a breaker block.
Okay, so all right, that's great. Thank you.
No worries. If you have any more questions, I can find more examples for you.
Okay, thank you.
No worries. Yeah, I don't really see any setups forming, guys. So in terms of live trading, I don't really want to trade this. But if you guys have any more questions, then I'll be here for a little bit longer. Have a look at CL, sure. No, I'm still looking at this market maker sell model. Nothing has changed, to be honest. Why is this all the way down here? Looking at this volume balance right now because price is rejecting off of it. So I think the low hanging fruit as of right now would be this low right here. I feel like this is pretty much a guaranteed target in my opinion. So you can keep an eye on that if you are trading CL. But ultimately, I like this low, but I think this is just a more promising original consolidation rather than that. Is there anything specific you want me to look at, Harv? Like, I'm gonna be honest, like, I think the move for today has been had, you know what I mean? I love seeing this right here. Whenever you have an imbalanced price range, gets traded back into and then displaces lower. It's so good. How would I be drawing my impulse structure? A bit like you explained. Snows to IRL to ERL. Let's take a look. So if we're using daily levels, I'll look for my hourly. Oh, we also have 3 drives pattern. That's beautiful. Here, so I really like how price is kind of doing this. So you see how we're getting IOFEDs. So we trade into this fair value gap, for example, and we continue displacing lower. So what I would be paying attention to right now is this breaker right here specifically. And I want to see how price reacts right there. And I think that by today, we're probably going to take this low, to be honest. I feel like that's very possible. And if I were to draw my range, yeah, I'd probably be looking at this. So like I'd be looking at a larger range, to be honest, like from up here, that point of interest, all the way to right here. Like that. I'd be looking at this. Three drives pattern in premium, we drop lower. Now I'm expecting further displacement lower. What do I think of EU and NQ for today? Okay, I'll go over NQ really quick. I'll go over NQ really quick, and because like I already have everything drawn out. So essentially for NQ is that I've been anticipating a market maker buy model since last week, I believe. I forgot when I posted it. Where I said down here, I think that this right here is going to be that smart money reversal over here. The only thing I didn't like when this formed, right, was that we didn't have SMT divergence on the lows. So this morning when I got to my desk, I saw that we do have SMT down here, right? We formed the SMT up here, or sorry, down here, and then we're looking for high prices. So this confirms, this SMT right here confirms my suspicion that we're in a market maker buy model to where, well, this massive inefficiency up here, or even this inefficiency above these highs, right? So this morning entering the market, I'm on my 5-minute chart. I understand that my daily quarters are Asia has been run out by London, right? So what does this look like? It looks like AMD, right? A accumulation. Guess I'll just draw boxes like this. Manipulation, distribution, right? Like that. It's not the most beautiful drawing. I'll try to fix it. 6. Right, so this is like perfect accumulation, manipulation, distribution, right? So if we're looking at NQ in terms of the daily quarters, then when I got to my desk at 7:30, then now I'm anticipating that the sessions quarters, right, the 90-minute quarters, they have to immediately correspond to the higher time frame cycle. So what's the higher time frame cycle right now? That daily cycle is accumulation, manipulation, distribution, right? And we're also anticipating that market maker buy model. So everything is in alignment. So this morning when I get to my desk, I can now look for my sessions quarters. So the 30-minute quarters, right? So 6, 7:30, 9, and 10:30. And that's what I'm looking for. I'll even put 12 o'clock right here. Right? So where am I expecting price to continue higher? Well, right here, this right here was a 15-minute fair value gap. Right. And if I remember correctly, let me look. SMT, oh, it occurred over here. Okay. So this is the 15-minute fair value gap right here, right? Right here. So I'm now anticipating if we get bullish price action, then I'm continuing bullish. So this is where I want to buy from, starting from this point right here. So I have my true session open drawn out. Understand that we want to buy below the true session open, right? So once we displace higher, we create what? a balanced price range, or a balanced price range right here, right? Because we trade higher, lower, higher. And that could be the market structure shift. On top of that, you also have this high get validated. That's another market structure shift. So a lot of bullish confluence. After that, we have this fair value gap created overlapping the true session open. So right here, I'm looking for price to support right there. That makes sense. And so within this fair value gap, this is now my new area of interest, like highly important point of interest where I want to see something occur. So right here, once we got this SMT divergence, that's how I kind of dissected that 930 was most likely going to be a bullish run. If that makes sense. And then further context on top of that is DXY is bearish right now, in my opinion. So everything kind of is playing together.
What's up, Ethan?
What's up?
I got silly questions, bro. I'm sorry, I'm new. I'm at the graduate program right now, so
You're good.
what happens is, when you learn like module 1, 2, 3, 4, whatever, by the time you get to like module 8, you're like, okay, it was working for me until that module. So I get rusty on things. So sorry if this is something repetitive. But how did you get the I have to go back to learning the deviations on different type of deviations. I saw that you saw that right now when you were explaining to us the AMD. How did you? What was your target today? And how did your deviations, basically match up to it? Like, because you were bullish, right?
Yeah.
Gotcha.
So my targets for today is these equal highs up here. That was my target. And then this high right here that I annotated earlier. The reasons why my target are these points and why I project from here is taught differently. Casper doesn't teach it the way that I do. Because this is something I personally just do through backtesting and stuff. It works for me, so I do this. So what I look for is the candle body swing lows and highs, and I draw my projections on that. So right here, you can see that the candle closes and then opens lower, right? So it's like a candle body swing low. Right here, it's a candle body swing high. That makes sense.
Yeah, I see it. And then basically, when do you put those on? When are you sure that the manipulation has ended? When you see the pop up on the breaker structure, that's when you're going and drawing the deviation?
I use SMT divergence to confirm that. So here, when NQ traded below this low, YM traded below this low over here, right? So we had that SMT divergence. We create a balanced price range that we support off of. So I can confidently put my projection on here because I understand that we most likely have this SMT. It's going to hold. Does that make sense?
Yeah. Yes.
And so with this projection, now I'm looking, well, if I'm projecting this, then I'm looking for -2, -2.5, -3, and -4. So it's usually between these two standard deviations, I'm looking for what target? Well, I see these equal highs. It's very obvious to me. Right? 1, 2, 3, 3 equal highs. Over here,
yes.
What do we have over here? We have liquidity resting right above -3.5 standard deviations and -4 standard deviations. I also see this high, which is possible. But my ultimate draw is this market maker model, right? Where I'm looking for this high up here, which is why I'm so confident that price is going higher. It's all narrative, essentially. That makes sense.
And yes, and sorry, this just goes into one question to the other because I'm seeing what you're doing. Your actual target, right?
Yeah.
You said you saw a market maker model. Like, when did you realize the market maker model? When the curve changed in the bottom, or?
Yeah, it was over here. Because once we got this massive displacement upwards, I was like, yeah, this is most likely going to be a market maker buy model. We have engineered liquidity on the sell side of the curve, right? There's a lot of highs here ready to be taken.
So that's what I was saying. How can you pick that high that you did for the ultimate target?
This one or this one?
That one.
This one I'm really just looking at a 4-hour. So I went to the 4-hour and I saw this massive imbalance, right?
Yeah, I see it.
Yeah, I was like, oh, okay, this looks like a good draw on liquidity. But in terms
The
of
4
market
hour.
maker model, where I'm really
Yeah.
ending is essentially, I think it was, let me take a look. Yeah, I think this is where, if you're looking in terms of a 15-minute market maker buy model like I am, then this is also
Yeah.
where it ends, because this looks like just the original consolidation right here.
Got
And
it.
in one of my lectures, I also explained that using SMT divergence to determine the
Yeah.
phases of a market maker model. So here, for example, I can assume that this is original consolidation because we have SMT on the highs, right? I
Okay.
believe this whole thing was
After the big displacement, that's the original consolidation. That's what makes it the OC. Got it.
yeah, exactly. So I believe this was another distribution phase, and there's one more down here.
Got it.
And so I'm looking at it like this, essentially. And so now that we take the distribution high, I'm expecting on this side of the curve, I want to see symmetry, essentially. So I want to see symmetry in the market. So if we're taking this distribution high right now, I'm expecting some sort of accumulation before we push higher into that original consolidation, if we were to push higher. And
Got it.
that's like the main reason I don't want to trade right now, is because my target has already been hit for today. If that makes sense.
Got it. And you didn't take the trade when today just because you weren't in front of the screens or something like that. Like I'm just
Yeah.
wondering like why you didn't take the bot. Okay, but you would have entered right there where you have the deviation starting, right? Like because
I would have looked for entry right here in this red box.
Got it.
Yeah.
Got it. And one other question, because I got once again it was like the whole jumping around in the modules because I wasn't there yet.
Mhm.
So the AMD on the weekly, right? So I was so pumped to learn the obviously time and price, but with the time of like, okay, Monday, Tuesday, we probably like, do a Monday, Tuesday, Wednesday, we're gonna do like some sort of accumulation and manipulation phase, right? And later on in the week, we're probably gonna do the distribution and maybe a Friday retracement, right, of some sort on the weekly candle. Which I was like, all right, cool, that was making sense to me. But then see weeks like this when so I was bullish, obviously, like on the higher time frames because there was a fair value gap that we bounced off of last week.
Mhm.
But I was confused because I was expecting today was going to be more of accumulation. So like this range, I guess accumulation range could be like whatever, right? Like even though we're having a pump, this could be part of the accumulation, right? Like the range for Monday and Tuesday, since we're in Monday.
Honestly, I think this is like an expansion move today. It looks more like an expansion move, so
that would confused when it happens because I'm expecting, I know everything's not to the T, but it happens a lot. Like the last 3-4 weeks I've been trying. Maybe it worked once.
Yeah.
Like we had a whole week there where it worked, and so that's why I'm asking. Like, do you look for that? Like when you're trading on Monday, Tuesday, Wednesdays?
Like do I look for accumulation?
Like like how? See me, I was expecting an up move for the week, but I was expecting like, okay, maybe we'll consolidate today, or like have some sort of fake out to the downside, and then we're gonna, but I was expecting it over like a couple of days. I wasn't expecting it today. Is what I'm saying.
Mm-hmm.
But the way it's taught, right? Like that's the whole psychology of it, right?
Yeah.
So
I think the only way you can really anticipate. So generally, I personally don't like trading Mondays as much, is because, are you familiar with quarterly theory?
Yes.
Okay, so if we're looking for
every single, on every single time frame, there's a quarterly theory. Yes, 90 minutes, the monthly, all that.
100%. So I explained this in one of the previous lectures. I don't remember which one, but essentially I don't like trading, like we don't trade Q1 or try to avoid trading Q1, and that would be Monday, right? And the reason is because we don't know what the weekly profile is most likely going to be without the information of Q1. Does that make sense?
Yeah, especially on something like NQ where we're already like past the all-time highs, so it needs more more data to accumulate.
Exactly. So it's like if Monday expands, then we can expect Tuesday to consolidate or accumulate, right? Whereas if Monday consolidates or accumulates, then we can expect Tuesday to manipulate. That makes sense?
Yeah.
So it's just
Yep.
like understanding Q1, where we are
Yeah.
within that cycle.
Same thing with the last 2 months, right? Like I know like ICT doesn't like say, he basically says don't trade the last 2 months either.
Yeah, it's the lowest probability. So you'll see that price is also somewhat more choppy, if that makes sense. It'll be choppier than you would like. For example, it's that's a good example. Like for example, right here, like no one would have expected such a massive drop lower and then like
Yeah.
high resistance liquidity run higher. You know what I mean? It's like if we're
Right.
going higher, we're looking for that low resistance liquidity run higher, not low resistance liquidity run lower and then high resistance liquidity run higher. Does that make sense?
Yeah.
Yeah.
That's all right. So right now we wouldn't be looking for all that anyways, what you're saying, until quarter 2. Like it would make more sense to stick to those rules at quarter 2
Yeah.
onwards.
That's for my personal trading. Is I think it makes more sense to wait to trade Q2 and Q3 because my favorite is Q3, and the reason being Q3 always has to be expansion of some sort. It's either manipulation or distribution, right? So that means it has to expand in some way, you know what I mean?
Yes, 100%. I thank you, man. Thank you so much. I don't want to bother you or for too much, but yeah,
No
I do have
worries,
to
no
watch
worries.
some. Just been avoiding them on purpose because I'm not, I don't want to confuse myself more than
Yeah.
even though I said for me, I need to know the basics first,
100%. I agree.
All right, Ethan, thank you so much, brother.
No worries,
Appreciate
no
it.
worries. If you have any more questions, feel free to ask them. You're a good game.
Thank you. No, I think that's good for now. Those are the ones I was super confused with a lot. I appreciate it.
All right, no worries. All right, so now we look at EU because I think that's also what you wanted to look at. So once again, starting on DXY looks bearish, right? So DXY looks bearish, then I'm expecting EU to do what? Go higher. And it also looks like we just completed a market maker model, if I'm being honest. This consolidation, accumulation. Yeah, I mean, just super quick drawing. It looks like we completed it already down here. And then we started trading higher, so I would still be confident in going higher. For the use of SMT divergence, I see it as a cool thing that happens, but I don't really see a use for it. So a use for it, Gabe, is essentially we're looking for cracks in correlation between markets, and what that means is just one market's being manipulated over another. So we're looking, like for example, if we're just looking at one market like NQ, then let's say we're waiting for manipulation, but manipulation never occurs and the market just runs without us. And what SMT divergence does for us is that we can look at ES and YM, for example, whereas they had manipulation occur. And so now we know that NQ is probably engineering liquidity for a future run. Does that make sense? So it's just identifying that manipulation through a different market because they're connected. Yeah, exactly. So you can predict the run. Kind of, you're like front running. That's what Smart Money is doing. They're front running traders. So it's like, okay. Okay, so let's say this is EU, and then here we have GU. Okay. Okay, so let's say on this is SMT divergence, where at one market you're expecting the lows to be taken, right? And it does. Okay. Well, let's say we were looking at this one and trying to trade this one. So without this one, right? Imagine we didn't see that, and we just see this. We're like, oh, market just went without me. Now I don't know what to do. I just have to wait. I missed my trade. But if we use SMT divergence, then we can look at this and be like, oh, this market right here is correlated to this market, and it took out the lows. It manipulated already. So now we can anticipate that this is just going to run without actually taking those lows, and these lows are engineered for a future run lower, where we'll probably have maybe like, you know what I mean, like an original consolidation, for example. That makes sense, Gabe? Okay. This is the monthly inversion gap I was looking at, and we hit that negative 2.5 standard deviations, getting some sort of pullback here. And on the daily chart, we can look at this RDRB right here, right? If we're in a market maker buy model, then we're expecting the RDRBs to be respected, right? So now I want to see this gap invert right here. I want to see this invert and then become a support for price to go higher, possibly -4 standard deviations. And that's my current outlook on EU. If I'm being honest, I think it's going higher. It just looks like a massive market maker buy model, to be honest. Right? That's ugly, but it's fine. So that's what I'm looking at for EU. Any does that answer your question, Sujal? I know it wasn't really a question, but that's really what I'm looking at, if that makes sense. Which one is better to trade if both do the same but one manipulates? Trade the one with the clear drawn liquidity. So let's, for example, if one has just a singular high and the other has equal highs, then trade the one with equal highs, if that makes sense. That's what I do personally. What's going on with NQ? We're just pushing higher. Explain how you see DXY as bearish. Yeah, I got you. I'm really just looking at order flow. Order flow looks bearish. So we took out these highs. I think it's clear on a weekly chart. Yeah. So we took out these highs and we started displacing lower, right? So this liquidity right here gets taken out here, but what gets created? Fair value gap, right? With this liquidity. And then we invert that fair value gap, right? That takes liquidity. So this now I'm looking for it to reject price lower because we inverted it. So this is that weekly inversion gap right here. And so once we trade back into it, what happens? We start displacing lower again. Okay. So right here, now we can start to anticipate that bearish PD arrays will be respected. So IOFED right here, where we trade into this fair value gap and displace lower, right? Once again, this fair value gap right here, we traded into it. We filled it up and we started trading lower. So that's why I'm bearish. So if I'm looking at my 4 hour, now I'm looking here and expecting lower prices from here. Makes sense? And these two lines would be that weekly fair value gap. But to be more precise, I use that daily volume imbalance, I believe. Oh, inversion gap, sorry. Inversion gap right here. We reject lower. And now I'm looking for lower prices. If that's, yeah, I'm looking for lower prices. I have no clue what I annotated here, so I'm just gonna delete that. Yeah. And also, what does this look like? Accumulation, manipulation, distribution, right? That's just what it looks like to me automatically. And the reason why this is like important is because it's occurring right. This imbalanced price range gets traded back into, becomes a balanced price range, displaces lower. Where you see longer term direction of the NQ on the daily, weekly. Let's look really quick. I think I might have to use this chart. So this is what I highlighted earlier, is that if this volume imbalance on the monthly chart I'm looking at is being respected, then I can anticipate that this fair value gap will be hit on the monthly chart. And then on the weekly chart, if we're truly bearish, then I want to see this gap that's being created right now. I want to see this stay open, essentially, if we're truly bearish. So once we meet our intraday objective, which is this imbalance up here, is this one right here, I would like to see bearish price action if that's possible, right? And I would like to see ES trade higher and take out this high, for example, and then like create an SMT divergence for that quarterly shift, and that would be ideal. But you know, that would be ideal, but I don't know if it's gonna happen. So that's too long term for me to kind of think about right now. Is just what I'm aiming for is price going here, and that's my intraday bias. Actually, I just realized I missed this, but this is an RDRB right here. So if we, so if we trade into this fair value gap, then I would be bearish.
Hey Ethan, bro. As soon as I'm done with the graduate program, what videos of yours can I watch that will be good for someone new?
Videos. Sorry, say that again.
As soon as I'm done with the graduate program, and I want, because like I was saying, it gets so much. Like I know in the end he's kind of piecing everything together, Casper is,
Yep.
Jesse. But yeah. So like even for you, like I know you've done a bunch of videos. Like you don't have to give me the answer now. I mean, you can think about it. I can ask you next time. What would be good for a beginner to as soon as I finish that course? Like, is there something that shows you like a set? This is my setup. Like, this is what I look for in the daytime myself. Like, something that you do basically. This way, I have like two perspectives.
Or you think so? Snow says that the Christmas special is really good.
Okay, was it good for like a beginner?
Hands down, Christmas special for everybody.
Got it. Thank you guys. I'll check that out. Thank you.
Honestly, I'd say this. I'd say watch all of them, and if you don't understand anything, just take it with a grain of salt. And anytime that I do trade, like I teach something that I feel like is less important over another, then I'll mention that when I teach it. If that makes sense. So
yes,
I'd say, yeah. So I think I'm really big on something. I'm really big on that Casper isn't very big on is SMT divergence, and that's just something that's so important to me. So I always incorporate it in my trading.
Got it. Yeah.
So if you watch my lectures, then there's a lot that will be like, oh, SMD divergence. You know what I mean?
Yes, even when you were answering me earlier, you used that when I
Yeah.
asked you how did you when did you decide it was a market maker model developing?
Exactly. But yeah, I think I'm gonna hop off here, most likely. So thank you guys for attending this lecture. I'm sorry I couldn't put on any trades for you guys. I just didn't want to force anything, so
Thank you, Ethan.
no worries, no worries. All right, take care everybody. Thanks for coming.